What's good, y'all? It's your boy TBT, aka the Brainless Trader, and we are back with another video. Today, what we're going to talk about is framing your stop loss around the high or the low of the day using the Asian range. Now, this is something that ICT talks about a little bit, but I want to get into it and show how I have used it to kind of frame my trades, use other PD arrays to kind of make sure that I get the best entry, the best stop loss, and the maximum take profit. Now, let's get into it.
Now let's break this one down. Looks like I have the fair value gap on the 30-minute chart. So if we take the lipstick off the chart, let's just explain it. Boom. You saw that when I entered here, I was stopped out, and then I re-entered, took my profits here. I did try to re-enter into a trade here, got stopped out, so I left that alone. Boom. We came back here. What happens? Here's buy side liquidity. What do? We run buy side liquidity into what? Oh my gosh, look at it. It's so nice. An order block and a fair value gap. Wow. Look at that. Boom. Now, you see that price is too weak to even touch the order block and the fair value gap, right? So what ends up happening is it stays weak. And so now we want to identify if price is weak, what PD arrays are going to form. If we can get that nice breaker, which y'all already know I'm looking for, then we can really be off to the races. Okay, so boom, let's identify our breaker. We go to the 5-minute chart. We can identify a breaker within this mindset that we're going to be taking a trade that hopefully is above the 12 a.m. open of the Asian session, which I have here. 12 a.m. open on Thursday was right here. Price is trading above it. Okay, we're looking. We have more confluence. Okay, we ran out buy side liquidity. Hey, doesn't even touch the PD rate. You got fair value gap and an order block again. Cool. Now, where's my breaker? I want to see where's my breaker. I want to see what's going to happen with my breaker. If I can have a breaker, then I can have a little bit more confluence. Boom, high, low, higher, high, lowest down close candle, breaker. You would say, well, you have 3 consecutive candles. Yes, I do. But the reason why I use the lowest down close candle on this is because where my fair value gap was located, it's basically aligned below this lowest down close candle. And so when I enter, I'm trying to use the lowest down close candle, of the breaker in conjunction with wherever that fair value gap zone is, right? And so this is the zone right here. Now this is the 5-minute. I wonder, did I have a 15-minute? I must have a 15-minute fair value gap. Oh yes, okay. So I had the 5-minute breaker that we just outlined, and we had the 15-minute fair value gap. Now, price obviously trades above my 15-minute fair value gap, and you can see I entered at basically within the 15-minute fair value gap. So if you go back down to the 5, keeping this in mind that I had a 15-minute fair value gap, right? So boom, you see that I got my 15-minute fair value gap, and I entered within the 15, right basically here. Now, this is probably too early of an entry. Probably should have waited until I saw price respond. Then I I entered here. I saw price respond to the 15-minute fair value gap and also the lowest down close candle. Now, had I just used the consecutive candles, then I could have then still kept in range, like, okay, I can have price go as high as this, right? And obviously you see it works out. But I was really trying to get a very precise entry. And so my stops, I believe I set my stops above the high of the day. So that's another confluence, right? Is, okay, we have the breaker, we have the run on liquidity, right? Into what we had up here was the fair value gap in the order block, which price was too weak to touch, right? Now, what do we have? We know that we're potentially at the high of the day, understanding that we're still majorly bearish, and we're trying to take a move in the sell side direction to target that, ultimate weak sell side liquidity. But if you can get an entry here within this breaker and look at where is the high of the day, it's only 20 pips away. Set it up here above the high of the day, so that even if my breaker zone is ran out, right, even if this overall, if I had used all 3 of the down close candles, but I really just used the lowest down close candle, even if my breaker zone is ran out, I still won't be knocked out of the trade, and it's still a solid risk model, right? It's still a solid risk amount that, okay, if I lose it, it's not that much compared to what I could make. Now, as you see, price runs the stops that I had, runs potential stops that I could have set here, but I had my stops up here, so I was safe. And then what does it do? It runs off. and it also forms another breaker. High, low, higher high, lowest down close candle here. You could have put your breaker right there, and you see the price came basically right back up, traded right back into it. And when you start to see these breakers form like this and consistency like this in the same direction, you start to see, your price, your targets are easily identifiable. Like, that's when you know that the market is starting to even out. You're going to start getting a lot more trades, that are easy to peg down, easy to locate and actually execute on. A lot of times in the January, February, March timeframe, you're going to get like one of these a week. You're going to get, even in April, it can be a little choppy. April into May, May into June, June into July, you see a lot of price evening out and giving you a lot more clear setup. So just keep that in mind as you're looking at seasonal tendencies, and understanding that, ICT has talked about us being majorly bearish in a general sense for May, and then, talking about September through October into November, you're usually in a more bullish mode of trading. You just keep those things in mind and understand in January to February, part of March, and then your July and August sometimes can be choppy. Even your December can be choppy, November, December. So just keep those in mind as you're trading, so you know where you're at, right? So boom, I entered here, stops were above the daily high, using the same thought processes before, understanding that we're trying to enter above the 12 a.m. open. Boom, we get exactly what we want. And a low hanging fruit target is here. You got 30 pips from where I entered, about 30. If I just go from the low of that candle, this candle that I entered on, you got about 30 pips, right? So this is beautiful. I don't need any more than this, and that's why you see I took my trade out here at right about 39, right? I don't need any more than this, because when price came down here the first time, it went way back up into the range. So that can be a little bit scary for some people too, because if you're watching that live, you're like, okay, I got my stops to profit, but darn, I want my money. You know what I'm saying? So you have to be careful. But if you continue to trade with confidence, sometimes it'll turn out your way, sometimes it won't. But you shouldn't have any reaction towards that.